All right, let's jump right in. We're going to talk about something absolutely huge happening in finance right now, but maybe not where you'd expect. We're looking at Africa's incredible story, how the continent is not just catching up, but actually leapfrogging old systems and maybe, just maybe, showing the rest of us the future. So yeah, let's get into it.
To really get why this story is so important, you've got to grasp the scale of the problem we're talking about. I mean, this is a massive challenge. The question is, how on earth do you bring financial services to 350 million people? Yeah, that number, 350 million. Just let that sink in for a second. And this isn't some old statistic. This is the estimated number of adults in sub-Saharan Africa right now who are still unbanked. We're talking no access to the most basic financial tools that so many of us take for granted. So you have this enormous gap, right? This massive financial divide. And that's the starting point for everything else. It's the challenge that basically forced the creation of some really, really radical innovation. This whole story, it's a classic case of necessity being the mother of invention. And that necessity led to the first huge leap forward, the mobile money revolution. Now, this was so much more than just a new app or some cool tech. It was a complete rethinking of how finance could work. And it was all built around the one thing that almost everyone had, a mobile phone. You know, what's truly mind-blowing is just how fast this all happened. It really kicks off with M-Pesa in Kenya, way back in 2007. But get this, even in 2014, only about a third of adults had any kind of financial account. Then the pandemic hit, and it was like pouring gasoline on a fire. It supercharged digital payments, and boom, by 2024, that number jumps to 58%. That is a massive generational shift in just a decade. And this chart, I mean, it just lays it out so clearly. You can see that explosive growth right there. But remember, this isn't just a bar on a chart. Each percentage point represents millions and millions of people getting a foothold in the formal economy for the very first time. And it was all powered by the phone in their pocket. Incredible. Okay, so this wasn't just a local thing. No way. This became a global phenomenon. Today, Africa accounts for a staggering 70% of all mobile money transactions on the entire planet. We're talking over $1 trillion a year flowing through these systems. You see, Africa didn't just borrow the idea of mobile money, they basically perfected it and made it their own. And this quote, it just hits the nail on the head, doesn't it? This wasn't about some flashy new gadget. It was about creating a real, practical solution that meant a shopkeeper could finally get paid on the spot, or a farmer had a safe way to put money aside for the future. It's life-changing stuff. But okay, as amazing and revolutionary as mobile money was, it wasn't perfect. It wasn't the final answer. There were still some big, fundamental problems that it just couldn't solve on its own. Some serious cracks in the system. And this, right here, is where the story pivots and gets even more interesting. So what were these barriers? Well, for one, there was a stubborn gender gap, which meant women were often left behind. Then you had things like spotty electricity or internet. And the cost of sending money home, remittances, was still incredibly high. But maybe the biggest one, the silent killer, was inflation. Imagine saving up your money only to watch it lose its value day by day. These were really deep, tough problems that a simple mobile payment system just wasn't equipped to handle. And that gap, that's what created the opening for the next step in this evolution: crypto and blockchain. Now, it's super important to understand this. The idea wasn't to replace mobile money, not at all. It was to build on top of it, to become a new tool specifically designed to attack those really persistent challenges we just talked about. And hey, if you're thinking this is just some tiny niche thing for tech nerds, you need to see this number. We're talking about $205 billion. That's the value of crypto transacted in sub-Saharan Africa in just 1 year. This isn't a hobby. It's a massive grassroots movement, and it's happening peer-to-peer on the very same phones people use for mobile money, all because it's solving problems that nothing else could. Okay, so what kind of crypto are we talking about? For a lot of people, the real game changer isn't something like Bitcoin with its crazy price swings. It's the stable coin. The easiest way to think about it is like a digital dollar. You get all the benefits of crypto, the speed, the low fees, but without the roller coaster ride of volatility. It makes it a perfect tool for everyday stuff like saving and paying bills, especially if your local currency isn't so, well, stable. And here's where the rubber really meets the road.
Let's say you want to send $200 home to your family. The old way, you could lose $20 in fees and wait for days. It's slow and expensive. But with a stablecoin, that cost plummets to just a couple of dollars, and the money is there in minutes. For millions of families, that difference, that's not just a nice little saving. That's food on the table. It's huge.
So, you see, the reason crypto is taking off isn't hype. It's pure utility. It acts like a shield against inflation. It makes it way cheaper for a small business to trade with someone in another country. It's a direct connection to the global economy, no bank required. And the real key? It's starting to plug right into the mobile money wallets that people already know and use every day. So where is all this heading? It's pointing towards a future where everything is integrated. The goal isn't mobile money versus crypto, it's about taking the best of both worlds and combining them. But let's be real, this new frontier isn't without its dangers. It comes with a whole new set of pretty serious challenges we have to talk about. First up, volatility. We talked about stablecoins, and they're great, but many other cryptos, their prices can swing wildly, up and down. And if you've put your life savings into something like that, that kind of risk can be absolutely devastating. It's a major, major concern. Next, and this one is just awful, is scams. Because crypto can be complicated, it's a magnet for fraudsters. You see these horrible schemes that promise the moon, prey on people's hopes, and then just disappear with their money. They target the most vulnerable, and it's a huge problem. And finally, there's regulation, or the lack of it. Right now, the legal situation is all over the place. It's a patchwork. Some countries have rules, some don't, and some keep changing their minds. This creates a ton of uncertainty and risk, not just for regular users, but also for the legitimate companies that are trying to build useful services. So what's the solution? How do we move forward? Well, it's not one single thing. It's a whole package. First, you need tools that are actually easy and safe for everyone to use, no matter their tech skills. Then, you need massive education campaigns to teach the basics and, crucially, how to spot a scam. You also need smart regulations that protect consumers but don't just crush all the innovation. And at the end of the day, it's about building those bridges, connecting mobile money, crypto, and traditional banks into one seamless system. Which brings us to a really fascinating final question. By tackling its own unique problems head-on with these mobile-first solutions, is Africa actually building the financial system of the future? Are we looking at a blueprint for a new hybrid model that the rest of the world might one day follow? It's a powerful thought, isn't it?